Thanks a lot for that. Well, a lot of banks are doing well today, many of them hitting fresh highs. So just take note of that. Bank of Baroda, Canara Bank, ICICI Bank, SBI, Federal Bank are all sitting at fresh highs this morning. So that's a pocket that continues to gain traction. But let's invite the first corporate on trading hour today. Glenmark Life Sciences is in focus on the back of its second quarter earnings. The generic business was more or less steady, while the CDMO segment saw a sequential growth of 27%. To discuss the quarter gone by, we're joined by Yasir Rawjee, who's the Managing Director and CEO of Glenmark Life Sciences. Yasir, good morning and happy Diwali to you, your entire team at Glenmark Life. Just wanted to start by asking you about the business from Glenmark Pharma. Over there, there's been a bit of a decline that we've seen in the numbers. Just take us through that and what is the expectation as we move along to the second half of the fiscal?
Okay, good morning to all of you and happy Diwali to you as well. Yeah, basically we've had a pretty good quarter, I would say, right? We've had quarter-on-quarter growth, like you stated, on the CDMO side. The challenge that we've had with Glenmark Pharma is, if you recall, right, we had the COVID drug that contributed very significantly in last year. And so there was a high base effect. But even if you take that away, there's still some degrowth on the Glenmark Pharma side. And essentially, I would say it's just a little bit lesser demand, which I believe will come back in the next couple of quarters. And so that should take us to a pretty, middle to, it should take us to single-digit growth, high single-digit growth. And I mean, we're looking forward to that. Our external business has been very strong. We've had very good growth from Japan, from LATAM, from India. And, so we've been firing pretty well on the external side of the business. And that will remain strong. So once the Glenmark Pharma business picks up a little bit, I think we'll be back into positive territory again.
Yasir, good morning and thanks for joining us. This is Pavitra. Just two questions. First, how much does this COVID part really contribute to your business from Glenmark Pharma? And also, how much is Glenmark really as a percentage of sales for you right now?
Okay, so right now it's dipped to below 30%. It's like 27, 28% of our overall revenue. But last year it was 41%. Okay, so that should give you a sense in terms of how much that has come down, right? And it was largely on account of the COVID drug. Okay.
And so, how much do you expect it to move to?
We should, for Glenmark Pharma's business, we should be hovering around the 30-32% mark this year. But then over time, it's only going to degrow. Because the sort of overlap in our portfolios is not very significant going forward. Okay. So we see that coming. But then the external business, like I said, is doing really well. Okay, and so we expect that overall we're going to see pretty significant growth going forward.
By significant, can you quantify that in terms of?
Midterm, I would say that we will be in the mid-teens, low teens to mid-teens, and that we should be able to sustain. This year might be a bit of a challenge because we have that high base effect, okay, and the demand apart from the COVID drugs needs to pick up. And I believe it will pick up from whatever I can see now. So it's going to be pretty good, but that should take us into the mid to high single digit growth this year.
Okay, mid to high single digit growth this year. That is in terms of revenue. What about margins? Because we were talking about supply side issues. At a point in time, you also said higher prices could impact your margins by say 2 to 3%. Have things normalized now? And in that scenario, what would your margin band look like?
So the margins, look, we've seen the worst and we've still retained our margins. Okay, I mean, we've been holding from 29% to 31% margins. And we continue to do that. I mean, the big reason for that is not the external world, really. It's all the efficiency that we've built up in-house, okay? Because the world is still a crazy place, as you all know, right? And we are dealing with, solvent prices that have come down a little bit, but there's energy prices that we also have to deal with. Certain raw materials have also gone up. So we worked a little bit with our customers to take up prices. That has helped. But then a lot of cost efficiency that we've been able to drive internally on energy, on solvent usage, on better cost improved processes has all come handy for us to keep the margin. So I keep saying, well, even if the worst is not over, our margins are still going to remain intact.
Around 28 to 30%.
Yeah. 28 to 30%.
Okay, 28 to 30% margins. Any impact of what's happening in Europe, the disruption on demand? How much as a percentage of your overall business comes from Europe, and what do you see as the way forward?
So we get a good 25 to 30% of our business out of Europe. And the nice thing is that demand is not slowed down at all. Okay. The only thing that we've had to do in these extremely cost-sensitive markets is bring in a lot of cost-improved processes. So while the volume doesn't change, the value does decline a little bit. And so there is an effect on our top line. The bottom line stays the same because we continue to retain the margins in spite of the cost improvement, right? So we do the cost improvement, pass on that to the customer. And as a result of that, there's a bit of, it does depress the bottom line, the top line a little bit, and bottom line stays intact. Okay, so that's how the Europe business is doing. From a demand side, we see good demand, but we've got to help our customers too.
But since a large portion of your business comes from there, around 30%, when you say the top line would get impacted, what kind of an average growth are you looking at, and how does it compare to the past, to the pre-COVID time?
So the Europe growth, right, would be in the mid to high single digit. But then we've got so much good growth coming out of Japan, out of Latin America, and out of India as well. So these three markets are also very significant markets for us, and they are sort of doing much, much better than what even we had anticipated. So all that put together gives us a very good overall growth picture. However, we do have some cost pressures from customers, in the European region, which we have to pass. We've got to give them better costs so that they're able to compete at the front end. That's the way we sort of work with our customers and keep the business going.
All right, Yasir, we got that. Thank you very much. We'll leave it at that today. So that is the management of Glenmark Life saying that, yes, they have seen some impact in terms of the business from Glenmark Pharma, largely on account of the COVID drug, but the rest of the business seems to be good. Europe might see an impact right now, and they are saying that that could compress the top line, but the rest of the geographies, LATAM, Japan, etc., seem to be doing quite well. So that is the word coming in from Glenmark Life. With that, we're going to slip into a short break now, but up next, as always, we shift focus to the world of